Melissa Long is here with more on that exclusive Bloomberg report on the legal loopholes that Google's found to save billions of dollars. Melissa?
Yes, and I guess you could call it the luck of the Irish, because through income shifting, Google has been able to cut its tax bill by $3.1 billion. This is over the last few years. I want to show you the graphics to help you to explain what can be a complicated story. In the U.S., Google's income tax rate, 35%. Overseas effective tax rate, that's at 2.4%. So again, kind of a complicated process. Want to break it down for you. A Google subsidiary in Ireland takes advantage of these local tax laws legally shifting into and out of foreign subsidiaries. Then the method that helps it to avoid Ireland's 12.5% income tax. Lawyers actually have a name for this. It's called double Irish. It's a strategy. But the money doesn't keeps on the money trail, keeps on moving as well. The next destination is the Netherlands with Google. Payments end up in a Dutch unit, as you can see. The company filings show it pays out 99.8% of the funds it collects. And yet another entity in a tax haven of Bermuda. This stopover earns it the nickname of Dutch Sandwich. Why sandwich? Well, because it's sandwiched in between the first and the final destination. One other thing I wanted to point out, and key to stress here, is that Google is not accused of breaking any kind of tax laws. Income shifting starts when the companies sell or license foreign rights to intellectual property developed in the U.S. to a subsidiary in a low-tax country. So the foreign profits based on the technology are then connected to the offshore unit. Still, I should point out, in February, the Obama administration did announce interest in curbing the shift of these profits offshore. An economics professor out of Oregon says the tax tactics like this, like Google uses, cost the U.S. government, Margaret, $60 billion in annual revenue.
Well, and we know, we had the Irish finance minister on the show. They say that corporate tax rate you talked about, the 12.5%, is key to their strategy. They're not touching it, though. They're hiking taxes everywhere else they possibly can. So who else is taking advantage of this?
Well,
Any other tech companies?
Of course, they're not the only ones. You have Apple, you have Microsoft, you have IBM and Oracle. Looking at just those few, from 2007 to 2009, their reported rates were ranging from 4% to 26%. And we also have information, company filings, showing that Facebook is preparing a structure that would be similar to Google. It would send the earnings through Ireland, but then they would end up in the Cayman Islands.